So here's an interesting article from Zero Hedge. The demise of dollar hegemony. Russia breaks Wall Street's oil price monopoly. Remember, all these years, we've been setting the price of oil, gasoline, through Wall Street, which is the COMEX market in this particular case, through these paper contracts. That is how they set the price. I've been over this millions of times. It's not OPEC, it's not Saudi Arabia, it's not the gas companies, it's not the oil companies, it's none of these people. These prices are set by Wall Street. So, if you can break that, or come up with something else, then Wall Street, the COMEX market, will lose its grip on setting the world's prices on a barrel of oil, which is why they're now $30 a barrel, because we want to crush all these oil producing nations, their economies, which includes Russia and the whole Middle East. That's why gas prices are down right now. It ain't got nothing to do, there's an excess of supply and there's tankers sitting around with plenty of oil and no one to buy it up, and bull crap. You don't have $110 a barrel oil, a year ago, and now it's 30. That would imply, if it's down 3 times its value, down to a third of what it was, that the whole world's economy and everything else is completely shut down to a third of whatever it was. When you go out every day, does it look like everything's shut down a third? Every 2 gas stations are shut down, every 2 grocery stores are shut down, every 2 people you knew that had a job don't have them now, right? Only one of them does out of 3. No. Russia has just taken significant steps that will break the present Wall Street oil price monopoly, at least for a huge part of the world oil market. The move is part of a longer-term strategy to decoupling Russia's economy, and especially its very significant export of oil from the US dollar, today the Achilles heel of the Russian economy. Later in November, the Russian Energy Ministry has announced that it will begin test trading of a new Russian oil benchmark. While this might sound like small beer to many, it's huge. If successful, and there is no reason why it won't be, the Russian crude oil benchmark futures contract traded on Russian exchanges will price oil in rubles and no longer in US dollars. It is part of a de-dollarization move that Russia, China, and a growing number of other countries have quietly begun. In case you're wondering, the quote, death of the dollar meme has been around for years and years and years, and the Webbot reports talking about a time in the future where it will be clear there is the death of the dollar taking place. This is one more of just such events, or pieces to the death of the dollar puzzle, if you will, that's driving a nail into the coffin. So, the setting of an oil benchmark price is at the heart of the method used by Wall Street banks to control world oil prices. That's what I've been saying forever. Again, thanks to Lindsey Williams. That's where I first learned about it. Oil is the world's largest commodity in dollar terms. Today, the price of Russian crude oil is referenced to what is called the Brent price. The problem is that the Brent field, along with other major North Sea oil fields, is in major decline, meaning that Wall Street can use a vanishing benchmark to leverage control over vastly larger oil volumes. The other problem is that the Brent contract is controlled essentially by Wall Street and the derivatives manipulations of banks such as Goldman Sachs, Morgan Stanley, JP Morgan Chase, and Citibank. The too big to fail club. The petrodollar demise. The sale of oil denominated in dollars is essential for the support of the US dollar. In turn, maintaining demand for dollars by world central banks for their currency reserves to back foreign trade of countries like China, Japan, or Germany is essential if the U.S. dollar is to remain the leading world reserve currency. That status as world's leading reserve currency is one of two pillars of American hegemony since the end of World War II. The second pillar is world military supremacy. U.S. wars financed with others' dollars. Because all other nations need to acquire dollars to buy imports of oil and most other commodities, a country such as Russia or China typically invests the trade surplus dollars its companies earn in the form of U.S. government bonds or similar U.S. government securities. The only other candidate large enough, the euro, since the 2010 Greek crisis, is seen as more risky. Isn't that amazing? The currency that has almost $19 trillion in debt, the country, us, is less risky. The leading reserve role of the U.S. dollar since August 1971, when the dollar broke from gold backing, has essentially allowed the U.S. government to run seemingly endless budget deficits without having to worry about rising interest rates, like having a permanent overdraft credit at your bank. That, in effect, has allowed Washington to create a record $18.6 trillion in federal debt without major concern. Today, the ratio of U.S. government debt to GDP is 111%. In 2001, when George Bush took office, W. Bush, and before trillions were spent on the Afghan and Iraq war on terror, how'd that work out for you? U.S. debt to GDP was just half, or 55%. It is now 111%. Yeah, but Lindsey Williams said the stock markets are going to crash in 2015. It didn't happen, so everything's fine. Right. The glib expression in Washington is that debt doesn't matter, as the assumption is that the world, Russia, China, Japan, India, Germany, will always buy U.S. debt with their trade surplus dollars. The ability of Washington to hold the lead reserve currency role, a strategic priority for Washington and Wall Street, is vitally tied to how world oil prices are determined. In the period up until the late end of the 1980s, world oil prices were determined largely by real daily supply and demand. It was the province of oil buyers and sellers. Goldman Sachs decided to buy the small Wall Street commodity brokerage, J. Aron, in the 1980s. They had their eyes set on transforming how oil is traded in world markets. It was the advent of paper oil, oil traded in futures contracts, independent of delivery of physical crude, just the paper is all that mattered, easy for the large banks to manipulate based on rumors and derivative market skullduggery, as a handful of Wall Street banks dominated oil futures trades and knew just who held what positions, a convenient insider role that is rarely mentioned in polite company. It was the beginning of transforming oil trading into a casino where Goldman Sachs, Morgan Stanley, J.P. Morgan, Chase, and a few other giant Wall Street banks ran the crap tables. In the aftermath of the 1973 rise in the price of OPEC oil by some 400%, in a matter of months following the October 1973 Yom Kippur War, the U.S. Treasury sent a high-level emissary to Riyadh, Saudi Arabia. So, there's a lot more to this article, but you get the point. You can see where I'm going with this. I'm not going to read this whole giant thing. There's no point. Bottom line is Russia understands the paper market manipulation that's been going on for a long time and has seen firsthand, especially right now, the cause and effect of allowing some entity to set the price of world oil. And it's once again the Western powers, it's once again the too big to fail American banks. These are the same banksters that work right inside the Security and Exchange Commission, the CFTC, They leave there, and then they go work for Goldman Sachs, JP Morgan. It's a revolving door. You think Russia could file some kind of lawsuit, or even you or I, with the CFTC? Hey, we want to see all the oil trades for the last year, 2015. We think there's shenanigans happening. Well, we're glad you inquired, but we looked, and just like the silver rigging, we didn't find anything. And they say, well, what else can I do? Well, you could, that's if you inquire with them or say, hey, I think there's manipulation, can you look at this? They're going to always reply, didn't see anything. Now, if you file a lawsuit against the too big to fail banks, the ones that have the lion's share of these commodities, these futures contracts, you can, by force, at that point, through the discovery process and whatnot, find out just how many contracts these banks had through the CFTC. And then you're going to say, well, hold on, I've already inquired with you guys, the CFTC, and asked about these exact dates here that I now get to see in court. And as I suspected, the too big to fail banks are buying and selling them to each other. Left hand sells to the right hand sells back to the left hand, and they push the price up or push the price down. And you said, we didn't find anything wrong. But now that I filed a lawsuit and forced you to show me what information you had rather than me stand back and just let you tell me what you found, you're a goddamn liar. Well, we had some incompetent people looking at that at the time. Right. You had some bankers working for you who then went to work for Citigroup, Bank of America, JP Morgan, Morgan Stanley, again, Goldman Sachs. Look, when President Obama came into office in 2009, one of the first things he did was put Monsanto's vice president in charge, the head top guy at the FDA, Food and Drug Administration. Genetically modified for-profit seed monopoly company, genetically modified, again I'll say it, Frankenfoods, if you will, is now in charge, top dude at the FDA. So not only is he going to allow everything to do with their poisonous foods and poisonous chemicals that are killing off the bees, etc. Oh, FDA approved, put that stamp on there, no problem. But we have club members, friends, part of the club. All you pharmaceutical buddies, come on down. The price is right. Because I'm in charge. I was just talking to my wife maybe 2 days ago. I was flipping back and watching a show, flip it, okay, commercials on, switch to another channel, which usually they're timed so that you switch and then there's a commercial on over there too. But sometimes you get lucky. So, I've switched channels, up pharmaceutical. And we sat there and watched it for educational purposes. We were both just staring at it, wondering how many, here's what it does. Stupid little fix for this problem that you could live with, actually. I think it was, again, the skin thing, a little skin tag, or a little red blotch on your skin. May have been Humira or some other one. I think it's a new one now. And then it got to the point of, here's the side effects. And I'm pretty sure most of the commercial, if it was a minute long, more than 50% of that minute was spent on the side effects towards the end, right? The last part of the commercial, more of it was spent, causes this, may cause that, ask your doctor this, if you have that, don't do this, if you have this, I'm thinking, oh my God, you're going to get rid of these little red blotches, but you're going to cause 17 potentially other harmful, health effects to your, issues to yourself. But I got rid of the red blotch, and that damn lady's now swinging on a swing with her husband who's 70. They weren't doing that before. When the commercial started, they were in a dark room. It looked like it was raining outside. Now the sun has come out. As soon as they read the may cause 1,500 other side effects. The sun came out at that moment. They're swinging outside and they're smiling and kissing and everything's fine. You got a guy like that running your FDA. So when something says FDA approved, does that mean anything? Hell no, it doesn't. It may have used to, but it don't anymore. The club has taken over every important position in the United States government. You are responsible for yourself now. You better figure out the stuff you want to eat, the things you want to put in your body, the things you thought you could trust. You better research everything. Take care.